Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. Hope you all had a fantastic weekend. Things are going to start picking up here, so lots to look forward to in the next few weeks. Earnings season gets going before you know it, and the news flow is really going to start to accelerate. First things first, we got Nike. So this video is going to talk about Nike earnings tomorrow night. Uh, Obviously, biggest athletic apparel name going to be turning in results, and I want to talk about the price and move and risk to reward for the current setup. So Nike has been a favorite name of ours for basically about a year. Actually, it was right around the fall last year when the entire complexion of the stock, like the entire character of it, really changed. Uh, you can see like the stock when it was basically was kind of range bound, had rolled over and was range bound, sitting underneath a 60. So it really not great action, wasn't showing any particular signs of strength, but back in the fall and into like the December timeframe, it started to wake up, and then it busted through 60. And I mean, basically since it took out 60, it's just been a completely different stock. I mean, you know, basically 2 years of chop sideways performance, and then last year it's just been a rock star. And this is a name that we've got involved with a couple times. And really, I mean it's one of like these trending names. So there's been a handful of these types of patterns that we've played. Not necessarily all retail. There's been tech names, software names. There have been other retail names, but like some energy names. But it's just like this trending, really like solid trending setup. Dips have been bought pretty quick. Moving averages have been super important. Rebounds have led to new 52-week highs. You can see like short dips, new high, dip, almost a new high, then a shallow breakout, and then new high. Dip to moving average, new high, dip to moving average, new high, dip to moving average, new high. I mean, it's patterns repeat themselves, and then Nike has been just a really nice trending name. I did a video a couple months ago ahead of the June earnings, and uh, that was a different specific trade, but we'd still have a call spread open going into earnings this week. So I kind of want to revisit the setup and just like talk about like some pros and some cons ahead of these results. So I mean, basically, in the last few months, there's been a lot of moving pieces on Nike. So you're going to have to factor that into earnings tomorrow. Uh, the June setup we liked because of World Cup seasonality. So with all that's gone on in the last like month, I mean it's kind of hard to it might be easy to forget that the World Cup happened just like about 2 months ago. But I mean that June quarter we liked because in 2014 there was a really strong seasonality trade where June results got an early boost, and then September results got like so it was like a preliminary boost to orders in June, and then a lagging boost to actual quarter in September. So it was a really nice like two quarter move where it started in June and built into September. So coming into this World Cup summer, we were looking at this trade kind of from like a similar perspective. There, nice technical break above 70 in this case. The stock started to run. We were looking for that seasonality trade. Now, yes, the World Cup should be a decent tailwind for Nike on these results, but there's a couple other factors to consider. Expectations are going to be much higher. Last quarter, big blowout move, and the stock had a kind of like a blowout move higher, which for Nike, that actually was one of its biggest one-day moves on earnings in several years. So The stock had good earnings, but it also had a huge move, so expectations are going to be higher. Also, China is a key growth area, and any potential trade issues could have an impact on their business, right? That's one thing we've started to hear about a lot more this for upcoming earnings is, what are the tariffs? What are the trade like spat, like how is that going to affect companies? And, Nike is a big world player. So, there's going to be some talk around it, and it could come up as like, some, either a headwind, or it might not be a huge headwind, but it could be a headwind, right? You don't really know yet. Also, with the marketing campaign, the recent new marketing campaign, there's been some early positive feedback from that, but will it have an impact this quarter or not? Kind of remains to be seen. So there's a lot of like things to consider, even non-technical or options related. I mean, like those are just like the fundamental things. When we go to the options, the weekly straddle is pricing about a 4.5 point move, give or take, which as you can see, I mean, it moved about 9 top to bottom last quarter. So the 4.5 points this week is about half of that. But going back to March results on the 22nd, it only moved about top to bottom 3.5. So, with June's results such like a big outlier, is that going to be the new norm, or is it going to be more in line with what it did in March and the previous quarters, where it's like 3.5 ish? So, options are looking at 4.5. If it moves anywhere near last quarter, it'll be those options will end up being way underpriced. But last quarter was also an outlier in the grand scheme of earnings on Nike, and it doesn't typically move as much as it did last quarter. And then, so that's option wise, and then now risk reward. So I talked about this last week in on the radar section in one of the nightly letters. But long story short, the risk to reward at this price point is close to 50-50. And what I mean by that is the current call spread is an 82.50 to 90 call spread, right? So the max potential that call spread could conceivably be worth is 750, right? So it's 90 minus 82.50. I mean, that's just basic options. So 750 is the max potential reward for that particular call spread if everything goes perfect. So with the stock where it is and the current position worth roughly say like $3.50, you can see that the risk reward is close to 50-50, and that means if 750 is the max potential reward, then at 350 there's about $4 upside. If earnings are a complete disaster and the stock drops into the 70s and the call spread's worthless, then it's basically you lose that 3.5. So it's basically like risk 3.5 to make 4. So when we say 50-50, it kind of is a 50-50. I mean, if it's worth 0, then you lose 350. If it's worth max at 750, then it's worth an extra 4 on top of that. So, like, holding into earnings doesn't seem as attractive as it did last quarter, and this is just like kind of specifically because of like the trade setup. So because this is like a call spread, the reward is capped. I mean, obviously, like the downside is what the price paid, but the reward is capped at 750. So this particular setup is a little bit less attractive. And when you throw in kind of like the moving parts where the stock maybe is has a little bit higher expectations, retail's been a little bit more mixed. I mean, there's definitely been some great retail reports and some great moves, but I mean, it hasn't been as huge. And I feel like June was just like a fantastic quarter for retail, where just you saw 20, like 10, 15, 20% moves nonstop in the retailer. So it seems that retail has kind of like started to consolidate a little bit. So, that being said, this is why, even though still bullish biased on fundamentals and technicals, it's why I'm more inclined to cut risk ahead of earnings tomorrow, just because the setup is a little bit less favorable risk to reward perspective, just for this particular trade. You know, some people will have different options on, but for the current October 82.50 to 90 call spread, the risk reward just doesn't seem as favorable this quarter. Um, so that's that's something that we're going to be monitoring tomorrow. Um, and really, earnings are, I mean, they're just constant battle between risk reward, option prices, and technical setups. So, sometimes the setups warrant putting on risk into earnings, but, then there's other times, kind of like Nike in this case, where the smarter move could be cutting risk. Um, what we are watching tomorrow, though, is typically there's a surge in volume the day of earnings in the options. So we kind of want to wait and see if there's an implied volatility ramp. Because sometimes you can see if there's like a late rush to get into the options, is people kind of like speculate on the earnings like the day of. You can see like an implied volatility ramp. So want to hold and see if that happens. But right now leaning towards cutting risk on this into earnings. Uh, no need to worry though. There's going to be plenty of other setups, plenty of other earnings, plenty of other catalysts, bios. Amarin was a crazy one today. There's going to be other bios reporting data soon, so plenty to look forward to. Definitely, please reach out. Love to hear from you guys. Questions, comments, anything. Just pass them along. Have a fantastic day of trading, and I look forward to talking to you guys tomorrow.